Hi guys, hi everyone. Hi guys, okay, just hang on. Can you guys hear me? Hi everyone. Good morning, good afternoon, good evening, wherever you are. Welcome to Vantage webinars. All right, so I think shall we just begin our session again, guys? Good morning, good afternoon, good evening, wherever you are. Welcome to Vantage webinars. As you already can see on the screen, today we're going to talk about the advanced smart money concept in practical application part 2. Okay, so before I start the webinar, disclaimer first. All right, you already know that everything in this video is purely educational in nature. All right, nothing in this video should be considered as an investment or trading advice. So please do your own due diligence before trading. Okay, and risk warning, you already see on the screen. Trading FX and safety carry significant risk and is may not suitable for all investor. All right. And to the myself, my name is Peggy. I'm an investment analyst and a prop trader. So for the just for some of you guys, if you're new to Vantage webinars, webinar provided 3 webinar per week, Monday, Tuesday, and Wednesday. So Monday is also about like transaction. It's gonna be me who cover that, and Wednesday you're gonna see me as well. And Tuesday is gonna be Christina. So basically, she gonna bring you or get ahead of those like fundamental. Okay, so if you have time, please come into our webinars. All right, guys. Okay. This is the agenda for today. So we're going to cover on this, we're going to recap. Okay, SMC foundations, market structures, institutional order flow and liquidity, order block, and FVGO fabric gap and market imbalances and supply and demand zones. Okay, so a quick recap on what we did past one. So there's a much many concepts. So basically, a trading methodology that focuses on understanding and following institutional order flow rather than relying on traditional retail indicator. So we just want to trade. We just want to follow the smart money basically. Okay, the core principle is that bank into institution move market liquidity drive price action. Price check in inefficiencies, market manipulation is systematic. Okay, the key difference from the retail. So for the smart money, okay, for the SMC, they follow the smart money, not indicator. They focus on where order are placed, understand liquidity, engineering, trade with institution, not against them. All right. So the market structure, furthermore, for the smart money, you should know how to look at market structures. Okay, so market structure, the framework of higher high, higher low, lower high, lower low, that define trend direction and strength. The bullish structures. Okay, so for bullish structures, you really know the price make the higher high, right? Right? Price make higher high, higher low, higher high, higher low. This is we know that upward momentum of the bullish. So you're gonna look for the buy opportunity when price is pulled back. Okay, and then you buy, right? But the bearish structures try make a lower high, lower low, lower high, lower low, lower high. You know that is the downwards momentum of the bearish trend. You look for the sell when price is pulled back and then you sell. Okay? Okay. break of structures and chain of character. Break of structure, short form BOS. So when price break to a previous high in uptrend or low in downtrend, confirming trend continuation for the uptrend, price break above previous higher high, break of structure equal to continuation. How it look like is here, right? It's right here. You see that price make the high, higher low, higher high, which is they break the previous high, which is this one. Okay, this is the BOS. Okay, and they continue to make higher, low, higher high, higher low, higher high. This is a break of structure, BOS here. Okay, meaning that trend continuation. All right, so for the chain of character, for the chain of character, when price breaks structure in the opposite direction, signaling potential trend reversal. So whenever trend break below the higher low, your chain of character potential reversal, which is right here. Let's just say price is on the upward trend of bullish, price make higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, continue. And price break the higher low. This is your higher low, the low, the previous one. Okay, so this level is gonna be chain of character. From the bullish gonna be to bearish, and price will pull back, make the higher lower high, lower low, lower high, lower low, lower high, lower low, and make a higher high. This is a chain of character, meaning the end of the downtrend. Pull back to make higher high, higher low, higher high, higher low, and continue. This is break of structure, break of structures, break of structures, chain of character here, and this is break of structure. Okay, it's continue. And then sometimes you might see the sideways ranging. Whenever they break out of the ball, and they might continue to go lower or upward. All right. Okay. Okay, for the institutional order flow and liquidity. So why institution need liquidity? So we know that large institution cannot supply or cannot simply buy or sell at the marketplace. They need massive liquidity pool to fill their order without moving price domestically. Okay, liquidity pool where stop losses cluster. So basically where we or retail trader place the stop loss. Okay, for the stop loss, for example, for the sell entry, you're gonna put the stop loss above the swing high, right? You're gonna put the stop loss for the sell or from the short entry. Below swing low, the retail will place the stop loss from the long or the buy entry. Those like round number or those psychological number level like ending with 0 or anything ending with 5 or anything like 1,000, 2,000 or 2,000, let's just say go move to $4,100 or for 3,500 or something like 2,000. Okay. Eagle high, eagle low, those are double top, double bottom trap retail traders. Okay. We're gonna look that later. Okay, we will talk about the other block of OB. Okay, so the OB meaning that the last bullish candle before a strong bearish move for the bearish OB, okay, or the last bearish candle before a strong bullish move. This is the bullish OB. Why is this is where institution plays significant orders. So we have two types of OB. First one is the bullish OB. You can see over here the last candle before the rally, which is this is the last candle, bearish candle here. Strong buying initiated here. You can this is very strong bullish move, and in gap this candle, right? This one is also act as a support on the retest, meaning that if you're gonna look here, right, look for the long entry. So when price pull back, okay, to the box, we're gonna look for the buy entry right here. For the bearish OB, last up candle before drop. This is the last up candle before it drop. Sorry, it's here. Okay. And strong selling initiated here. Okay, you can see that OB, very strong bearish move. And you can see that it also break the key level. This one, okay, is what the support level, right? Multi-swing low support level, and this one is close below impulsive mover imbalance. It's broken. It broke the support level, and now it will act as the resistance and retest. So you need for price to pull back to the box, and then you sell. Oh, right. Clear my drawing. Oh, okay. I think so. This is the one. Okay, you can see that price go to the box and then you sell. All right, that's the OB. Okay, for the fair value gap, FVG, and market imbalances. So what is the FVG or fair value gap? A three candle formation where the middle candle wick doesn't overlap with the candle before and after it, creating a gap or imbalance in price. Why FVG is mattered? So FVG represents area where price moves so quickly that inefficiency was created. The market has a tendency to return and fill the gap, providing trading opportunity. So you're gonna look at the picture, you will see here that, okay, usually the second candle gonna be like imbalances, gonna be very imbalance here, right? That's why it create the gap right here. So you want to trade with the FVG, you'll see that you draw the box, right? And then you see the bullish. This is gonna be recorded bullish FVG. So price falling and fill in the gap. We're gonna buy here, and then you can see price move up. All right, and another one, this is a bearish FVG. You'll see that first candle, and there's a gap right here, right? This is an imbalance candle. You can see the price falling and move in the gap and then falling. So this is called bearish FVG. All right. Okay, now we'll talk about supply and demand zone. Or after this, I'm gonna bring you guys to the chart and we're gonna practice together. Okay, so understanding institutional zones. So supply and demand zones are area where institutions have significant unfilled orders. These zones act as magnets for price action. So we have the demand zone and supply zone. For the demand zone, which is the area where buyers overwhelm sellers, identified by strong bullish reaction, best form before explosive rally, price rally to bounce on return. Then you can look for the wrong entry. Okay. Supply zones area where seller or buyer identified by strong bearish reactions, distribution before explosive drop, price likely to reject or return, look for the short entry. Okay, so maybe we look at we're gonna look at the chart together. Okay. After like one more slide to go. No. Okay, so high probability setup, the more SMC concept that align, the stronger your trade setup becomes. So this is the checklist if you want to trade with the SMC. For the checklist, that first you need to identify the current market structure, if it bearish, bullish, or sideways. Okay, you have to wait for liquidity grab, so like sweep or high or lows. Look for break of structure or chain of character for confirmation, and then identify the order block in the direction of the structure. So if you know that price on uptrend or bullish, then you should look for the bullish OB because we're gonna buy, right? We want to follow the higher time frame. Check for the FVG within or near the order block. Confirm supply and demand zone alignment. Enter on the retrace with tight stop loss. Target next liquidity pool or maybe like another high. Okay. Here high look like like I'm gonna pull out the gold. Okay. Right here. Okay, let me just identify, of course, on the gold. Okay. I think we're gonna see gold is make a correction or like kind of pullback. Okay, even though we know that on the higher time frame, price is still on the bullish move because based on the weekly, okay, I'm gonna do for the weekly time frame, price still have make this is the BOS, right? Still make the break of structure here, break of structure. Like break of structure here. Okay, right? On the G1 time frame. Okay. Yesterday was I think it was the first time that I saw gold falling. Yesterday was like should be somewhere here. More than no, let me just open the candle. Okay, let's just say move, okay? Yesterday, move. It's about, let's just say almost 3,000 pip. Yes, within a day. Okay, like yesterday candle and yesterday candle closing with bearish engulfing. Then this is they created the bearish OB. Okay, this is our bearish OB. The choice is that you're gonna wait for price to go, pull back in the OB, and then you're gonna sell, right? Okay, right here. So you're gonna zoom in. Whenever price make all-time high yesterday, and then you know that this is the reversal pattern, double top, break below, break the support level. Now we're gonna go pull back here, or pull back here, and then you sell. Okay. For smart money, I think they're gonna wait here. but that will be traditional. We're gonna sell here at the neckline. Okay, we're gonna observe that later. This okay. We know that price on uptrend, so we want to buy. If you want to buy, what we need to do, you need to look for the bullish OB. Okay, you look for the bullish OB. We have the bullish OB here. Maybe H4, I don't see it. Maybe go to H1. Okay. Is there a reason here, price above from here? Okay, first, if you trade with support and resistance, you're gonna get stop out because this one is gonna be your pullback support level. Okay, you see that from the support zone, price all the way down another, let's just say 550 pip. 550 pip. Then after that, it's close above the level. Okay, so price come, if you retail trader, you will get stop out. Excuse me. Look below what you're gonna see. Okay, I'm gonna look below here. I know that this, okay, if we talk about the FVG, right? This is another FVG on, but it's not work already because this one is already went in the FVG. This one, right? You will see this wick, this candle. And we're gonna look below. I see that to me, this is a demand zone. This one. Okay. Rally, base rally. And price what I make the higher high, high low, high high, high low, break. If you're gonna look right, the order flow, this was the resistance. Before that, price moved down and after start to make the higher high, higher low, higher high, higher low, and this low that push the price up and break above this resistance level. So in this one, okay, so this entire move is called bullish order flow. It's called bullish order flow. Okay, and before the price move here, they also create the demand zone here. And if I'm gonna scratch all the way down somewhere around here, price really come to the demand zone. It break, it really like, you know, close, I mean, they pass through the support level, you can see that, and went down another 550 pip to demand zone here. Okay, you see that, and it bounced up. You see the wick. This is a H1, right? It just bounced off 670 pip for gold and rising. Okay, so what you're gonna do right now? So today, okay, I'm gonna do the like the daily time frame, okay, for the day trade. So based on the based on the D1 time frame right here on D1, yesterday price closing bearish candle. So today I'm gonna look for the sell entry. Okay, so basically first just identify the resistance right here. And of course, if we're gonna identify, we have the FVG right here of value gap. Okay, right? Remember that I'm gonna market structure just now. Price make the higher high, higher low, higher high, higher low, higher high, higher low, right? And BOS is a form of continuation. BOS, right? For this one. Okay, so whenever change the color, yeah, black light not so nice. Okay, whenever price make the chain of character the break below the higher low. And gonna be this gonna be your chain of character. Okay. And over here, you're gonna wait for price. Continue to make the higher, lower low, lower high, lower low, lower high, lower low, lower high, lower low, higher high, higher low, higher high, higher low, higher high, right? Chain of character is here because they break the previous lower high, and after that they're gonna create the break of structures, BOS, right? Another BOS, and so on and so on. Okay, BOS. Whenever they break, this is also your break of structure here. Break of structure here. Break of structure here. Okay, right here. So now go back to this again. Okay, for the FVG fabric gap, we have this and this. And this candle, I'm gonna call imbalance, which is the break this support level, which is this one, right? The break because of this imbalance. So we're gonna wait for price to pull back to this level. I know that this is big, so what we need to do, I think you need to go to the lower time frame, or you can use Fibonacci. So we in the FBG we have like between, let's just say, 50% and 61.8. So this is gonna be our first sell zone that I'm gonna look at today. So I'm gonna go or zoom in to the lower time frame and look for the sell entry. Okay, this is gonna be my first sell zone today. Okay, you see that how many within the zone that would be about like 5,500 pip. Okay, but take notes, guys. Nowadays, go move how many pip. You can use ATR if you don't want to see ATR average true range. ATR. Okay, so I'm gonna. All right, based on the where my ATR? Oh, it's loading. Okay, based on H4, the ATR, I mean, the average true range is about 590 pip, meaning that within H4 time frame, go move, okay, average 590 pip. Okay, so last time, like a few years ago, like 2 or 3 years ago, I think gold, like in a lower time frame for like the bounce, right? Is about 30 and 50 pip. But right now, based on the M5, M15, okay, gold bounce or move, how many? More than 500, more than 50 pip. You can see that it's about 80 pip almost. Okay, between 80 to 100 pip for M5. Okay, so even to scalping like 30 and 50 pips, I think now today is very easy if you trade. I mean, if you trade in your favor, okay, but you also can get like stop out really easily as well. And if your lot size, okay, like big or you overtrade, your account will be gone, right? So let's say your account is 1K, I think within less than 1 hour or maybe 30 minutes, you can blow your account if you did not manage your risk and if you overtrade. Okay. All right. So back to again here, we do setup. Okay. All right. If we're gonna look at market structures, okay, I would say my chain of character is gonna be right here. Let me remove. Okay. Let me remove first. Let me remove this. This. Okay. I still consider, I would say, okay, this breakout structures, right? But my chain of character, it would be here. Because this, like, if we're gonna look right here, right? The maybe from here, higher, high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, equal high, lower low. Okay. Right? So this is my chain of character, this level. Okay. Let me just remove first. I'll remove here. Remove here. And we have the FVG, this one. This is the bearish OB. I'm gonna mark out. I'm gonna note at my bearish OB in D1. I just say day. Okay. Okay. Day, right? So you're gonna do here or the body. I'm not just say draw the body here, right? So if price pull, okay, if we want to use the premium and discount zone PD area here, meaning that this zone we're gonna look for the sell entry within the bull box. Okay, right here. We're gonna look here. All right. Okay, guys. Hang on. I'm looking at the app. Okay. Okay, continue. All right, so here, so basically in this bull box, we're gonna look for the sell entry. I mean, this is gonna be our sell zone. Okay, if we're gonna look at E price have to go above 50, we're gonna sell. Okay, but we know that our sell zone is big, so we can just kind of like narrow down the zone. So one sell zone we saw is at the FVG of fabric gap right here. And if we're gonna use the Fibo, okay, we're gonna look for the retracement. Okay, we have within our FVG right here, let's say we have 50% and 61.8%. So we're gonna look for the sell entry. I just say we in this zone first, our sell zone, plus minus a few pips, okay? And we can go down even more to like V5 entry. Okay. What we do right here, what we can see right here in the, do we see any like, okay. Within here, narrow the zones. I would say that, okay, this is resistance, I know in the lower time frame, but within the FVG, I want to narrow. I have another FVG here. Okay, fabric gap. Here. Okay, another FVG here. Also above here, another demand. So you said, wow, there's so many zones. So which zone we should do? You just no need to, just either you mark here in the H1, and then you just watch out. Whether price go in the zone, you see any rejection, you see any confirmation, and then you can sell, okay? Or you just wait for price to go up at least 50% above, and then you sell, all right? Narrow the zone. If price did not respect this zone and break, even like in the lower time frames or M15, okay, you will look here, right? If you don't see any confirmation, you just wait, okay, until you see the, sign of confirmation or rejection, and then you buy yourself. For example, this morning, I mean my terms of morning price all the way down to this level. The confirmation is which one? It would be, let's just say, this confirmation. These two candle engulf the previous candle. Okay, and then you wait for the pullback and then you buy. Maybe you go to the M1, right? You will see that price pullback. Okay, pullback somewhere around here and then you buy. Okay. Which is here. Oh, okay. Then you see the confirmation. Did you see the confirmation over here? This is your confirmation. This candle. And from that, price closing with bullish engulf, right? Come in the box and then rising. This is M5. You will see the confirmation in M5 and this zone, this level, you can't see anything, right? Should we zoom into H1? Okay, in H1 time frame, you'll see the demand zone here, right? Okay, and you see the rejection, which is confirmation in the M15. You go to H4, H1. Just want to see is there any like level? Okay, you see that, and this was used to be the support, resistance break because this candle, right, come in. Okay, and then you say, what about this resistance level? Why price didn't? You see a lot, just slightly like have a rejection, but it because this move, I tell you already just now, higher high, higher low, higher high, higher low, and break. This entire move is a bullish order flow. Okay, so this is the important zones. And price falling back here again. We will see the double top rejection and price has closed below, right? Close below 34355 and also close below is 34380. Okay, let's use this is the Vantage. Okay, I'm gonna identify this is my FVG or fair value gap. Okay, and they have break the this is channel character. Okay, and our within the FVG just now we have what? We have 61 and 78.6%. Okay. The level. Okay. OB or the block for the D1 is gonna be here. So for the FVG, that's gonna be our first sell zone. Okay. Mark daily time frame. Okay. Okay. Then 78.6 is gonna be above that. Right here. Within the OB. So now we gonna wait for sell. So now price come from the let's just say support level, and they also H4 closing with very strong wick and the OB here. I would say this is OB, but because this is a long wick, so if I want to buy, price have to come in the zones. Let's say this is bullish OB. Okay, we narrow down the zones. Price have broken this resistance in the lower time frame. We have another. May consider to buy at this level. Okay. Oh, and price went in. Price had went in just now. Sure. Oh, it's already out. The zone yellow, right? These are the buy zones. Okay, these were the buy zones. Narrow down the zone, right? You can see this is demand here. And price went in, have the rejection. And I think it's going to go to that zone because they have broken this level. Okay, and also broken this level. I want to use the channel, but I don't want to force this. But if you're gonna look here, okay, if you're gonna look here, based on the M15, have the chain of character. I'm gonna say here, this is chain of character, and continue to make the break of structure is here. Okay. For the M15. To go where? To go slowly to go bullish. Maybe here. Funny and go here and then falling. Or it's maybe go there. The okay, this okay, the London pre-market is open already. This is London. Okay. That's what the New York PM, the Asia, they make a close above the New York visit Asia session. The London is here. So we're gonna buy, we look for the buy entry, and then we're gonna see whether price is gonna rise back. I mean rising to this level, and then we look for the sell entry right there. Or is this the London open and then it just keeps selling? Okay, we need to monitor, but I'm gonna look for the sell entry anyway today, which is at these zones, but there, I think there's no news, the major news today. Okay, there's no major news except for the GBP. Yeah, except for the GBP just now. Okay. Oh, okay. This is gonna be something like that. And I think this one might be the pullback and do the like correction. Either be here and then falling. Okay, somewhere at this level. There might be something like that. And from here, then we can continue to buy. Okay, we just wait first. If you want to buy, let's go for D1. If you want to buy D1, Just now for scalping, okay, there, the buy entry, because we buy because we want to sell at this level. And another key level, this one is still considered support level. And this one gonna be another support level here. Okay, so I'm gonna sell here to see whether price gonna make like, you know, the collection or make the zigzag. And like A, B, C, maybe. Okay, we're gonna see. What's about the lower time frame? All right, guys. So just take notes. No, that cannot do. So first for smart money concept, we just want to follow the big boy in the market, right? Don't forget that. And oh, go back to H4 again. This I'm gonna move here. Zoom in to see. This zone is liquidity. Okay, you can see that. Price has go back above this. Like just say you were to sell at the resistance, maybe where, I don't know where, and then you say that you put the stop loss at exact where ATH 4379, let's say. And price have moved up and clear the stop loss and clear the buy stop as well, and price is reverse. You see that? And close above the ATH as 4379, let's say it's all the way go to 4381. So 4381 meaning that if you're gonna put the stop loss exact, let's say you sell here, then you put stop loss at one round number 4381, remember, and then price it went to 4380. You put the stop loss 4380, and the price went up to 4381.52. You will get stop out, right, at this level. After you get stop out, either you stop loss, get stop out for the sell entry, and then trigger the buy stop. Trigger your buy stop, and then price falling, and hit your stop loss for the buy stop order, and then falling so crazily here, right? Because liquidity is equal to their money, right? To me, right? You see that? Went up, clear, stop out, sweep high. Remember, they will say that go back to the slide. You wait for where? You wait for price to sweep the high or low. Okay, right here. Right here. Wait for liquidity grab, sweep of high or low. In the case, it's what? It's sweep the high, right? Here, right? You can see that. Sweep the high. Okay. And no. Let me move in somewhere around here. Okay, I'm gonna go to the lower time frame. And then you're gonna mark out that's the high. Okay, here. Rising. Boom. Sweep, right? And what do you see here? M15 has made you what? Create the bearish OB here. Bearish OB here. M5. Even M5. M5 has also another OB here, meaning that you're gonna wait for price to go in the box and then you sell, right? Correct? Okay, price went in the box. Do you see that? Went in the OB. Okay, this is gonna be a sell entry. And when now go to the OB, they clear the sweep right here, the high. Okay, and after that OB you sell. Based on the M5, This is the higher high, right? This is the higher low, meaning that I need to close below this level to make the chain of character, right? No, sorry. These are the high. The chain of character is here. Boom. Prime make the chain of character is here. Okay, now what we need to do, you're gonna look for the entry. Either there's no OB here, this is maybe resistance level. Okay, there is no FVG, there's no nothing. Maybe I will use Fibonacci. We use like 50 to 78.6. I go to M15. Okay, M15, I will see that I saw the FVG here. One FVG, which is we might want to look for the sell entry. One here, another one is here. Okay, and this is our sell zones, this zone. Okay, price go in the FVG, right? And then you will get the entry right here. And now, chain of character, what you see in the lower time frame, this is your BOS. Okay, BOS, I'm gonna go to the higher time frame. Sometimes you need to look for the higher time frame, right? What is happening here? I don't always stick to the lower time frame. Okay. This M15. This could have another sell entry right here. Okay, the break of structure. Okay, lower low, lower low, lower high, lower low, lower high, lower low, should be lower high here. Okay, right, boom, right? And what do you see that? And keep falling right here. BOS. And from that on, it's never pullback at all. Okay, right? You see that all the way to that level. Okay, guys. And they also have the BOS here, break of structure here until here, BOS, right? You said it's a BOS. You also know the BOS. This is just boom down and chaining character here. So now gonna see whether price gonna pull here or another buy entry that I think we can consider would be here. It haven't taken OB, bullish OB here. Bullish OB here. It's still fresh. That is here and this level. This level. All right, guys. Okay, you see that? So either here or here. And I'm gonna use the people. That would be here it's about 38.2%. 38.2. You don't see here. In between here, I don't see any except for really have tiny FVG, but I don't want to force it, okay? But I know that it's small somewhere. Here we have 61.8%. So just monitor, okay? Or you can just leave something like that. If price falling, like break boom, right? That you're not going to enter buy over here. You need to wait for price to like slow down in the lower time frame first, like, and after that you can buy. Okay, you look for the M15 if you want to see M15. M5 look like this. All right, these are still break up structures. Let's see if this is gonna change the character or not. We're gonna see. All right, guys. So, any questions before I end the webinar, guys? I'm gonna catch up with you again. Continue to SMC part 3 on next Wednesday. All right, guys. So thank you so much for joining the webinar, guys. Good luck to all of you. Catch up with you guys again next week. All right. Bye for now, guys. Take care. Bye bye.